Good morning and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at MarketSite is Tendayi Kapfidze. He is the chief economist over at LendingTree. And according to LendingTree's research, we are going to be $4 trillion in debt as consumers by holiday 2018. Help me wrap my head around that. I thought we were getting better at saving and paying off our debt.
Well, we're actually kind of doing a little bit of both, right? So the savings rate is actually up. The latest GDP numbers revised the savings rate upwards to about 7.2%. But at the same time, consumers are spending. If you look at the GDP numbers that came out this morning, consumption, which is consumer spending, was one of the largest contributors to that. So there's some savings going on and there's some spending going on. Both of those are good for the economy.
Right, but do you think the amount of debt that we're in as consumers could potentially impact GDP? We have to pay it off before we could spend.
Yeah, so the amount of debt right now is actually fairly manageable. If you look at their statistics that measure the amount of payments that people have to make, and those are actually at pretty low levels compared to where they were, for example, during the financial crisis. So debt has increased, but the amount of income that consumers are earning or people are earning has increased a lot more since the crisis. So we're actually in a healthier debt position than we are today,
right,
even though we have a higher amount of debt.
Right, and I think it's an interesting comparison that you make because the market and the economy overall is very different than it was 10 years ago. It's almost like trying to compare the stock market today versus the 90s. It's just, you know, two very different markets, two very different economies. Let's talk about student loan debt, though.
Yeah.
$1.5 trillion. That's kind of an unfair amount if you're first coming out of school. Are you concerned about that, and how are delinquency rates with that group?
Yeah, so there is some concern around that because that is actually the fastest growing component of debt. And it has a lot to do with, you know, after the crisis or during the recession, a lot of people go back to school, right, when the economy is not doing well. And then coming out of the recession, it was a lot of competition to get jobs, and a lot of jobs, actually, there was a lot of credential inflation, for example. And so people were going back to school, and schools were getting more expensive, so that led to a big ramp up in student debt. So that is a bit of a concern because if you have this large amount of student debt, it precludes you from other types of purchases such as houses.
Now, overall, how are credit delinquencies, though? Because that's a key factor.
So mortgage delinquencies are near all-time lows. Credit card delinquencies have started to tick up a little bit, but they're still low relative to the crisis. Student loan delinquencies are also pretty manageable. A lot of it has to do with, you know, people can get into repayment plans that are income-based, and people can refinance their student debt. Right. So delinquencies are only a bit of a concern for some subprime auto segments. Otherwise, all the other segments of consumer debt, delinquencies are looking pretty manageable right now.
So maybe we learned something from the crisis as consumers.
I think people are getting better at managing their debt, right? And I think an excellent example of that is one of the biggest increases we've seen in wealth has been in housing wealth, right? So home prices have been going up. People have built up a lot of home equity, but home equity loan balances are actually down to $400 billion from about $600 billion. So people are not tapping into their homes as an ATM, which was one of the big criticisms running up into the crisis. So we are getting better at managing debt.
All right, and to wrap it up, tell us about LendingTree and how you're helping consumers.
So what we try and do at LendingTree is we try to make sure that if you do need to borrow, you get the best possible deal. So you can come on LendingTree, you're shopping all the lenders, and we're trying to make sure that you get an interest rate that helps you manage your debt and, you know, keeps those delinquency rates low because people are getting better deals and learning how to manage their debt better. We have a lot of educational tools as well.
All right, well, thank you very much for joining us at MarketSite, and thank you for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.